Brazil's economy expanded by 1.2% in the first quarter, data showed Tuesday, faster than economists expected, as rebounding services and investments restored the largest economy in Latin America to its pre-pandemic size at the end of 2019. It was the third quarter in a row of growth. While the bounce has slowed, the underlying figures suggest a strong foundation for a continuing recovery and a rise in the currency of Brazil. This provides a very positive outlook for the coming quarters, said Jason Vieira, chief economist at São Paulo-based Infinity Asset Management, who described the data as a really good set of numbers, particularly fixed business investment. Brazil's real increased to 5.15 per dollar, putting it on track to close at its highest level of the year. It is up 0.5 since December 31, a significant recovery from a more than 10-year-to-date loss against the dollar in March. Economy Minister Paulo Guedes predicted that growth will be very strong this year, and Citi and Goldman Sachs increased their forecasts for 2021 gross domestic product growth to 5.1% and 5.5%, respectively. When the economy stabilizes, we expect to see further progress on the COVID vaccination front, with a return to gradual economic growth, more fiscal stimulus, and recovering consumer and business confidence. Brazil's economic recovery has also accelerated inflation, necessitating aggressive rate hikes. The central bank increased the benchmark Selic rate by 75 basis points at each of its last two policy meetings, bringing it to 3.50%, and has indicated that it will do so again next month. Brazil's first quarter growth was fueled by services, industry, and fixed business investment, according to data from the country's official statistics agency IBGE. Agriculture expanded at its fastest pace in 4 years in the third quarter, growing at a rate of 5.7%. Government spending decreased, while manufacturing shrank. According to Vieira at Infinity, household consumption fell less than expected and is expected to remain surprisingly strong for the remainder of the year. The January to March period's 1.2% growth rate was higher than the 1.0%. The wide range of forecasts from 27 economists indicates that assessing the influence of the end of emergency government assistance to the poor on December 31 and the onset of the COVID-19 pandemic's second wave will be difficult. Industry expanded by 0.7, the dominant services sector expanded by 0.4, and fixed business investment increased by 4.6% in the third quarter, according to IBGE. Consumption by households fell 0.1%, while government spending fell 0.8%, marking one of the steepest quarterly declines in years. Manufacturing output decreased by 0.5% within industry output. GDP increased by 1.0% year-on-year, IBGE figures showed, exceeding the 0.8% increase. Economic activity has returned to pre-pandemic levels at the end of 2019 but is still 3.1% below its 2014 peak. However, economists warned that tight fiscal policy, rising interest rates, and continued uncertainty surrounding the pandemic and the government's economic reform agenda all point to much slower growth next year.